Good evening and welcome to PreciseAlgorithmTrading.com. It is Thursday, May 4th, 2023, and let's get into the markets. We've had a relatively big sell-off here lately, last few days. I should point out that on what is this? There's bars. That's tomorrow's bar actually showing up on the futures. So that's the 5th. That's today, Thursday, Wednesday, Tuesday. On Tuesday, we got a sell signal on the daily True Momo indicator, and I believe that's when those sell signals showed up on the weekly True Momo indicator, which is a sign where everything, and plus the bullish percent indexes, were flipping into the other direction, the bearish direction. So that would have been a place, could have been a place to go short, or just to get at and go to cash, not to be too long in anything that's tied to the S&P 500, which is a lot of things, because that's a lot of people use it as a gauge for the market, and there's a lot of things tied to the S&P. A lot of the sectors move with the S&P, not all of them, and that's why we also track the Nasdaq, the Russell, and the Dow tends to move more like the S&P than the other two do. So that's why we do it. Anyways, I'm not really all that short in anything. I'm more headed into cash. That's where I'm at right now, and a lot of things, except for the things like I am still in some Dow or some Amazon and Apple, and those are Nasdaq products. So I just actually, everything's based off of these signals, and when I get these signals, that's when I go. When I get a signal to get out, that's when I get out, and that's how I trade regular stocks and exchange traded funds, for what it's worth, and mutual funds a little bit too. So I don't really trade mutual funds. It's just they give me signals of when to go to cash, basically. And you can't do that too often in some 401ks, because you're limited in how many times you can trade in and trade out within a year. So, all right. That all being said, the S&P 500. I threw our Harvard study on here, which is the gold lines. I've talked about it before. The gold lines and the light blue line here, and it is important to me that on the last trading day of April, the S&P closed above the gold line, which is a long-term buy signal, or can be. And then really the sell signal for that is a close below the light blue line, which, yeah, you're risking a lot if you actually get in up there. You're doing better if you wait for a pullback to buy. So in theory, if you're using that kind of an indicator, you could buy some long-term things right in this zone right here. It's also noteworthy to me, and I've been bringing it up, that it's sitting on the 618 Fibonacci line. We drew in these lines, I think, last week, the Fibonacci's, and the 618 is the kind of like the be-all end-all break point. If this thing closes below the 618, and for sure the 50% line, this market is in real trouble. So right now I could still see basically a consolidation zone. It's getting wider, which is a little bit worrisome, but we also had a breakout to the upside on the Red Trail weekly indicator, and now it's pulled back, which is totally common. And it's still got a little bit of room to move. It could get down to this 50% line without breaking all the way down and flipping over again. So I don't know that the daily can handle that. I think we would get a total sell signal on the daily Red Trail scan indicator. But it's also interesting and noteworthy. We'll flip over to the Nasdaq right now. The Nasdaq's been holding up the best, and if we look at Apple, it's got earnings tonight, aftermarket, and I believe I got this thing turned on where we can see the aftermarket action, and it's up. So It made it all the way up to 171 from where it closed today at, I don't know where it closed. We'll close today was, yeah, 165.79. So, at least that's what it shows up as the last over on the left side. The close looks like it was 165.78, so whatever, close enough. It made it all the way up to 171. That's pretty bullish unless it falls through the night. And right now it's sitting up here around 169.92. So what we could be in for, and I've seen it before, I'm not saying it's going to happen, but we could be in for a market tomorrow where, we have Friday action that maybe either pulls us up and then sinks us next week, or maybe we just get some bullishness, and then maybe the Dow and the S&P fall for a while, and then maybe we can get some capitulation at the end of the day, going into the weekend, which is actually pretty bullish. But if we get something like that, and I want to show the oil market is kind of what that looks like. Capitulation is these like big wicks to the downside. That's a hammer candlestick, and I'm not saying it's going to reverse, but that's a pretty good sign of a reversal. You can see when we have big wicks back here on 320, March 20th, and a series of those longer wicks to the downside. That's like showing you that price is getting pushed back up after it's trying to get sold. So, and then you can get a reversal after that. I don't take any of that by itself. I take it along with our true Momo indicator or some of those things. But that's just, I've been doing this long enough to, you can't just take a hammer candlestick. You'll get sunk. So it happens. It's happened to me plenty of times in the past. So I'm not saying that will happen, but I'm saying that it's possible. We just had the Fed. They raised interest rates, and then they signaled that they're going to stop for a while. And to get a sell-off after all that, we do have the bank noise that's going on, but it's a pretty common thing that the Fed can move a market one direction and then totally reverse within a week. And that would be like, they came out with the news, they sold the market off, and then all of a sudden the buyers jump in because they realize, hey, it's going to be another, it's going to be a while before we hear from the Fed again. So they start either buying or selling and start moving the market the way they want to move it. All we can do is jump on. So, all right, the Russell, it's still down here in this lower area. It sure looks like it wants to probably break down and go a little bit further. To me, I don't know if it'll make it all the way back to these lows back here, but if it's testing that keeps testing that, pushing down to that range, I would almost expect it to break that range, get a bunch of bears to the on the table, go in that direction, and then take them underwater and raise the thing at least temporarily, because that's what the market does. It gets a whole lot of participants going in one direction and whips them underwater, and then rips back the other direction, and it continues to do that. And so what we're trying to do is just follow where the big money's going, so that we don't get too much. We don't get whipped by that kind of action too much. So, all right, then there's the Dow, and the Dow. That's interesting. It also closed last month above the Harvard line. So, but it does have bearishness on all time frames. So, all right, that's that. Let's flip over to stockcharts.com and look at the bullish percent indexes. We'll flip through pretty quick. The Dow went down by 10.53% today. That's a pretty big move. The NYA flipped over to a new column of O's today. minus 5.91%. That's a fairly large move to the downside. The transports minus 11.11%. Also a pretty big move, but it was already, I think, that's what, yeah, it was already in a, it wants to flip over to a column of those. I can almost see it going now. The NASDAQ, it only moved 3.1%, so that's interesting in the scheme of things. We had a pretty bearish day, and the NASDAQ held up. The S&P is bearish, continues to be bearish, down by 2.99%. Then the ones that I really pay attention to because they move the fastest, the NDX, the NASDAQ 100, didn't move, so that's interesting. If the NASDAQ 100 starts to like improve here, which it could off of the Apple earnings, that could signal an early flip back up to the upside. You want to get some confirmation though. And then the OEX just tacked on more O's today, down 5.36%, and it was already in a column of O's, so the path of least resistance there was really already to the downside. So flip back to our automated trading system, and this one trades all by itself based on an algorithm, and literally trades up to 30 times a day, I think, is what I have the thing. It never does that. It's more like 4 or 5 times a day, but in each one of these. And anyways, so this is the actual net equity that's going on in our account. So if we started back at the beginning of the quarter at 0, which you can't do because you need to fund your account, you'd be up now about, I think this is $3,000 over on the right hand side, and on a longer term basis it's like $10,000, so, or $12,000, I guess. That's what this does. It hasn't really been great for even the 6 months. It's better on a 12-month period, but this is not a get rich quick scheme. This is it's just an alternative to buy and hold, kind of, because you got to be in to win, and you've got to have patience, and that's really what the market does to you anyway. Even if you're a buy and hold investor, you got to have patience through the downswings. This is just the same kind of a thing, but it's more like on steroids. It trades all day long, and you're trying to catch volatility. So this is the Russell 2000, and I modified this algorithm a weekend or two ago, and that's because, I mean, it still looks like the other one that I had. It just trades fewer times, and it has, basically trading fewer times means I'm also saving on commissions. Although the trade-off was I have to trade more contracts, so it might be about the same. And the bottom line is we have to fill in this gap over here to get back up to new all-time highs in our equity. So, and then the NASDAQ's powering along. It's been the best of all of them, even though we've had some pretty significant sell-offs, but they've been intraday. So these new green dots mean that our equity is getting new equity peaks, new equity highs, and it looks great really on the quarter, which is what we're looking at here. It also looks great on the 6-month chart, and it looks better even still on the yearly chart, which I'll try to post over the weekend. So that's what I got, guys. Hopefully it helps, and stay tuned. We'll see you.